at law, a corporation is a separate legal person. This means that the corporation can act as a shield for your personal assets. Your corporation can fail without putting your personal assets at risk. It's kind of a big deal. So you're thinking of starting a business in Canada. Have you considered the best corporate structure for what you plan to do? In Canada, there are primarily 4 types of corporate structures: sole proprietorships, corporations, partnerships, and joint ventures. Let's start with the simplest form, the sole proprietorship. A sole proprietorship is the most simple and straightforward form of business ownership. It requires minimal paperwork and there are basically no regulatory formalities, making it an attractive option for small-scale ventures and freelancers. In a sole proprietorship, the owner has complete control over decision-making and operations, but they also bear unlimited personal liability for business debts and obligations. While it's rather simple and cheap to start a sole proprietorship, there is no liability protection, and all profits are taxed at the owner's personal marginal tax rates. This can have significant tax implications, making it an important factor to consider when planning for your business. Despite these drawbacks, sole proprietorships can still be a great practical option for individuals looking to start and operate a small business, a freelance practice, or a solo enterprise. The affordability and lack of hurdles to getting started, combined with the owner's ability to maintain full control over the operations, can make sole proprietorships a really attractive option for people that are just starting out. The downsides of not having the liability protection or tax advantages afforded by a corporation may not be such a big deal. That said, they do make sole proprietorships more of a short-term option rather than a long-term strategy. Next up, we have corporations. These are the most commonly used type of corporate structure in Canada. With various types of corporations available, depending on jurisdiction, incorporation offers a number of advantages over sole proprietorships. Liability protection for shareholders, greater access to capital, and certain tax benefits are the main ones. The main thing to understand is that at law, a corporation is a separate legal person. This means that the corporation can act as a shield for your personal assets. Your corporation can fail without putting your personal assets at risk. It's kind of a big deal. And if your corporation is sued, and as long as you haven't been fraudulent or grossly negligent, creditors won't be able to come after your family home or your life savings. As a separate legal person, corporations are taxed separately from their owners, and they're subject to corporate income tax on their profits. Corporate tax rates are generally more favorable than personal tax rates, so that's another advantage of running your business through a corp. Corporations can also exist indefinitely, as long as you complete your annual corporate filings, that is. This makes a corporation a great estate planning tool as well, because you can structure the corporation in a way that allows it to be passed on to your children in a tax-efficient manner. The main downside of a corporation is that they have more compliance requirements. Corporations are governed by specific regulatory regimes and therefore have certain governance requirements set out by their governing acts. They have financial reporting requirements. Most of these items are pretty easy to comply with. You just need the help of a lawyer and an accountant, and you'll be fine. Partnerships are interesting and complicated legal structures. But if you're just starting out, a partnership's likely not the right structure for you. In order to form a partnership, you need 2 or more persons carrying on business in common with a view to profit. It's a 3-part test. These persons that are carrying on the business can be individuals, corporations, or even trusts. There are various kinds of partnerships, like general partnerships, limited partnerships, and limited liability partnerships for professionals. A discussion of the various types of partnerships is beyond the scope of this video. What you really need to know is that a partnership is not a separate person at law. A partnership is not taxed as a separate legal person, and therefore it's actually the partners that are taxed. You also get into some interesting situations where, because a partnership's not a separate legal person, it has difficulty holding certain types of assets, and you need to structure around that. Partnerships are often governed by complex partnership agreements because all the rules that govern the partnership have to be covered in that agreement. Even though partnerships are complicated, they're also really versatile. And depending on your objectives, a partnership can offer great liability protection, certain tax advantages, and actually will do a great job of governing how you run your business. Partnerships, like I said, are not taxed as separate legal persons like corporations are, so the partners themselves are the ones that are taxed annually, and therefore they're all taxed at their applicable marginal tax rate. In the case of individuals, that means you're going to be taxed at your personal marginal tax rate. In the case of a corporation, you'll either be taxed at the small business rate or the regular corporate rate applicable in your jurisdiction. And last, we have joint ventures. A joint venture is similar to a partnership in some ways, but it's typically project-based rather than the parties having this objective of carrying on business in common. The distinction can be confusing, but a corporate lawyer can probably help you out there. Again, if you're just looking to start up a business, you're probably not looking at a joint venture, and it's probably not the right structure for you. JVs tend to be more appropriate for businesses that are already up and running, and the decision's been made to carry on a project with another already operating business. I'll be doing a whole video on joint ventures, so if you're interested in learning more about them, keep an eye out for that. To wrap it all up, if you're looking to start a business, you're probably going to be choosing between a sole proprietorship and a corporation. If you're already up and running and you're looking to start a project with someone else, then a partnership or a joint venture might be the right answer for you. Depends on the circumstances. The best approach is always going to be dependent on your facts and circumstances. If you'd like to talk to me about your situation, you can always reach out to me at Sebastian@outsiders.law. I'd be happy to set up a call with you to talk about your business plans. Thanks for watching. If you found this video helpful, please like, comment, and subscribe. Helps with the algos and also lets us know that we should keep producing this kind of content. Have a great day.